Good morning and welcome to the pre-open edition of Storm Stock Solutions. I'm Grant Mercer. Futures are setting up against a pretty bullish backdrop this morning, with the major indices parked just shy of record territory, and traders leaning into the idea that easier policy is getting closer. Let's bring some clarity to the chaos as we head toward the opening bell. Let's start with the big macro driver. According to reporting from MarketWatch, all three major U.S. stock indices closed with back-to-back gains yesterday, sitting on the doorstep of record highs. The spark was an unexpectedly weak private sector hiring report for November. Ordinarily, soft jobs data might spook the market, but right now investors are focused on the good side of weaker labor. It strengthens the case for a quarter-point interest rate cut from the Federal Reserve as soon as next week. That's the lens for this morning. The market is trading the bad data, good for rates narrative. If that rowdy cut expectation holds, dips may be shallow and growth stories will stay in the spotlight. If incoming data or Fed signaling pushes back on that cut, the tone can flip quickly. Now, in terms of opportunities and strength, there are a few key themes traders are watching. First, media and entertainment is front and center. MarketWatch highlights Netflix and Paramount as the current favorites to buy Warner Bros. Discovery, the owner of HBO and CNN, the twist? Investors don't love it. Both potential buyers saw their shares fall as details of possible cash bids emerged. Strategically, it shows renewed M&A appetite in streaming and content, but tactically, it reminds everyone that big-ticket deals can weigh on the acquirer's stock in the short run. Short-term traders will be watching those three tickers closely for headlines and reversals. Second, you've still got broad index strength, with the S&P, Nasdaq, and Dow all within striking distance of new highs. Momentum and trend-following strategies are in play again. When you are this close to records with a dovish Fed narrative in the air, systematic and options-driven flows can add fuel to the upside if we break out. So watch how futures behave in that first 30 to 60 minutes. On the flip side, we've got some clear areas to handle with care, particularly in software and cloud. Salesforce delivered earnings that, on the surface, look solid and very much tied to AI momentum. Management is talking up what they call a powerful pipeline of future revenue. But as MarketWatch notes, the key question isn't whether the next few quarters look fine. It's whether those results are strong enough to flip what's been a fairly bearish sentiment backdrop in that name for an extended stretch. When a stock has been under pressure and then gaps higher on earnings, traders immediately ask, is this the start of a new trend or just a short covering bounce? That makes Salesforce one of the more fragile swing names heading into the open. More broadly in big cap AI and cloud, there's a bit of nuance. Microsoft, for example, is under a cloud of its own this week on reports of AI sales issues and sales quota adjustments. One analyst quoted by MarketWatch downplays it as fairly normal early in the fiscal year. But the fact that the stock dipped on the headlines shows how high the bar has become for anything AI-related. The theme here: AI winners are still central, but expectations are elevated, and any sign of slowing can trigger sharp reactions. Turning to the under-the-radar setups, there are a few names I'm keeping on a background watch list this morning. Snowflake is a big one. It just posted an earnings beat, but as Emily Berry at MarketWatch points out, growth in product revenue slowed, and the stock has meaningfully outperformed peers this year. When you're already priced for perfection, good isn't always good enough. This is one of those stories that may not explode at the open, but could become important if we see either follow-through selling or buyers step back in on any intraday weakness. Delta Airlines is another quiet one to track. After the recent flight shutdown and cancellations, Delta told investors the hit to the December quarter is manageable, and that demand remains healthy. Wall Street actually seemed relieved the impact wasn't worse. For airlines and travel, this becomes a test of resilience. Do investors treat operational hiccups as one-offs in an otherwise solid demand environment, or as signs of fragility? Today's trading in Delta and its peers will help answer that. In the background, there's also a growing conversation around infrastructure for AI. MarketWatch has a piece on how IS massive power needs are creating opportunities for companies tied to energy, power infrastructure, and data center build-out. The argument is that the shortage of power is painful but potentially lucrative for the right players, though the window might be brief. Again, that's not a buy or sell call, just a macro theme that could gain traction if more headlines hit around data center constraints or grid upgrades. Finally, keep an eye on policy and regulation around autos and energy. Reporting out of Washington highlights a proposed rollback of fuel efficiency standards, which would lower the long-term miles per gallon targets for car makers. It's not going to suddenly make cars cheaper, according to MarkWatch's analysis, but it does matter for how automakers plan their mix between internal combustion and EVs over the rest of the decade. Any shift in regulatory expectations can ripple through autos, suppliers, and even oil demand assumptions. So heading into the bell, the macro backdrop is supportive with a market betting on a Fed cut. Index levels are flirting with all-time highs. AI and software remain powerful but crowded trades, and you've got a mix of deal news and sector-specific stories in streaming, travel, and autos that could drive stocking-specific volatility. I'll be back with intraday updates once the market opens to see how these stories actually play out on the tape. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady,